Blame it on Pogo or blame it on the rain, the market snapped its 4-week win streak while the S&P 500 suffered its biggest drop since Q4 of 2022. Is this cause for alarm? Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Outlook. The week opened with a news bombshell fresh from the Philippine President's State of the Nation address. President BBM instructed PAGCOR to wind down and cease the operation of POGOs by year-end. So, of course, this sent property stocks tumbling down the next day, with Double Dragon taking the biggest hit, understandably, as they are the most POGO-exposed real estate stock in the PSE. Even our favorite DG Plus was not spared the knee-jerk reaction, pulling back 6.5% on Monday before bouncing back the next day after they released a statement that they were not affected by the POGO mandate by the president. Sometimes it's really knee-jerk reactions like this that gives us an opportunity to buy the dip on a good stock. On Wednesday, traders woke up to a surprise shortened trading week as the stock exchange suspended trading due to floods, which also washed away 1.2% worth of gains from the markets the next day the markets opened. How do these calamities affect our local companies? Mining companies may not be able to gain back the days lost, and the flooding may have caused several disruptions in their operations. The material sectors took a hit last week, pulling back 2.32%. But consumer discretionary up last week as floods may have destroyed, appliances and cars. While this is not really something that we should celebrate, we have to still look into the fundamentals here because, of course, there's still upside for car dealers like AC and GT Cap. Also upside for retailers like SM and probably construction companies like Wilcon. Let's look at the PSEI charts. The market maintained its price action along the 6,800 and the 6,650 price range. Hopefully, the strong finish last Friday will continue this week and bring us back into the 6,800 resistance level for another try at a breakout at this zone. Remember, we have the trend line resistance and also a very strong resistance here at 6,800. So we did get our pullback last week, but with only 5 trading days before the ghost month and the momentum on the MACD showing signs of weakness, we may experience a further pullback, probably to 6,500 or worse, 6,400. Drawing a Fibonacci chart, we can see that the 6,575 level does make sense for a pullback, as this is the 0.38 fib and it does correspond to both the 100 and probably the 200-day EMA. Zooming out to the weekly charts, the PSEI broke its 4-week win streak with an indecision candle. Rejection on both sides could also mean we could consolidate along this band in the meantime. Now, if we look at the 1-hour time frame, see here the strong rally of the PSEI last Friday. We'll see if we can keep this momentum up coming into this week. Now, let's look at some index heavyweights here. SM, still very strong going into this week. They are the biggest appliance retailer in the country. Now, Concepcion Industries reported last week a 100% increase in their revenues driven by sales of air conditioning units. So if we go back to SM's retail unit will most likely also benefit from this increase in sales. Now, AEV also reported last week 10% net income profits, compared to the first half of last year. But on a quarter-on-quarter basis, unfortunately, the growth rate of AEV is just 2%. So really nothing to celebrate about. And the market, I guess, didn't like the results. So it didn't help the troubled stock going back down to the 35.60 level, hitting the resistance here at 39.35. So again, when the trend of one stock is down, really, any reversal in this trend will require a significant amount of force. 2% revenue growth is not going to cut it. Could this be a double bottom, or will it break down further? In any case, if it continues to trade lower, consider cutting loss and move on to stocks with better price action. Now, one stock in particular is URC. See how it has obviously reversed. We did mention that after consolidating here, a dip into 104, 105 would be a good zone to buy. So far, so good for URC. Congratulations if you were one of those who were able to get URC at these levels. Some stocks I picked up last week. Manila Water, looking good at 26.40. Best if you were able to get at 25 level. Remember, Manila Water reported 37% revenue growth in the first quarter. So they will report their second quarter results soon. You know, if we get an increase in the sales of air conditioning unit in the summer, and we will have more electricity consumption in the summer because it's hot, it also makes sense for water demand to go up, especially during the heat wave last April. Plus, water supply wasn't really affected by the El Nino phenomenon. Supply is healthy, demand is up, so something to watch out for Manila Water. So I also picked up some A-REIT and some RCR for my clients after the knee-jerk reaction to the Pogo news, as they don't have Pogo exposure. So this was a good buy the dip. And also, A-REIT had its ex-date last Thursday. So if you missed out on the BDO and BPI rally here, Metrobank, the forever laggard, could be the next good pick up. Still looking at 72 and a possible breakout at that level. No? We'll see. So on to the global markets. Of course, US election news has to happen on a Sunday as Biden announced that he will drop out of the presidential race a week after the Trump shooting incident. The growing sentiment over his age was just too much to overcome, bringing an abrupt end to his 50-year political career. This gave investors something to chew on as the market started to reinforce the Trump trade, pricing in a trade war with China and a potential hike in inflation. But the earnings took over the bear market as Tesla and Alphabet earnings fell short of investor expectations, pushing the markets to its worst day since 2022. NASDAQ declined 3.6%, while the S&P 500 fell 2.3% during Wednesday's trading. I was actually looking at the Alphabet earnings, and if you look at the numbers, right, 14% year-on-year growth. The cloud business generated 1 billion revenues for the first time, right? Operating income is up 26%, net income is up 29%. It's really a head scratcher why Wall Street felt that way. But perhaps this may have something to do with the upcoming Fed meeting in July, because while the ECB kept rates steady in their July meeting, other central banks like the Bank of Canada has already cut rates twice, while China also starting cutting rate, and there are some sentiments along policymakers that the Fed may actually be too late in cutting rates. Also, semiconductor stocks continues its woes well into the second week. Rhetorics from Biden and Trump, of course, about a China chip ban and China tariffs continue to weigh the sector down coming into earnings this week. Plus, the concern that the AI promise may have already played out in the markets may have also contributed to this decline. A couple of good news though came in during the later part of the week. GDP growth came in hotter than expected, 2.8% compared to the 2% expectation. So that was good news, while the PCE numbers rising at its slowest pace had the markets getting its rate cut hopes up, ending the week mixed but broadly in the green last Friday. But you see, I don't understand this, right? So Google had good earnings, but the market reacted negatively. Here, they're saying inflation slowed down at its slowest pace, but it still went up. Anyway, let's look at the charts. The S&P 500 suffered its straight week of losses, but it managed to bounce back almost into the 5,480 critical zone. Zooming into the 2-hour charts, we can see that this level here has been rejected twice. So there may still be bears coming into the markets this week, and this may actually push the S&P 500 down further into the 0.6185 along the 5,350 support. This bounce last Friday obviously might be met with further sell demand coming into this week. It does make sense, right? Because if we look at the NASDAQ here, this really tends to happen during this time of the year. See, we have a a surge, 50%, and then a 13% pullback. We have another surge, 33%, a 9% pullback. We've surged 23% so far, and we pulled back 9.6%. We could still have a few more space to pull back before the market rebounds, right? So if we look at the VIX, typically during election years, we do tend to get two spikes on the volatility index. Coming into the weakest months for the market, we could see some extended volatility similar to what happened last year in October. Now going back to the S&P 500 charts, going into the weekly time frames, bull markets tend to bounce along the 20 EMA. At this point, the pullback to 5,350 does look like a possibility if we are expecting a reversion to the mean, especially on the weekly charts. Now let's look at some historical trends for the S&P 500 during the years when the Fed starts cutting rates, assuming that the September rate cuts will follow through. As long as growth rate remains positive, we do tend to see a couple more years of upside for the markets. Remember that GDP growth rate came in at 2.8%. So yes, growth isn't weak, so we could actually follow along this trend. But if you look at the start of the cutting cycle, we do tend to get a significant pullback, right, before the market rebounds in the next 24 months. Not only are we in a rate cut cycle, but 2024 also happens to be an election year, and election years tend to do well in the normally weak months of August. The correction, especially towards the tail end of July, should typically be nothing to worry about, as we historically do experience this before a surprising rally coming into August. How many times do we actually get a 2% pullback on the S&P 500? It turns out we do tend to experience an average of around 5.9. The worst year was in 2008, where the market had 41 2% drawdowns. So far, we've had 2 this year. Now, has the market peaked? Possibly not yet. The markets do tend to experience a peak in December more than any other month of the year, with July and August with just 3 times in the past 74 years. This week, the Fed decision is due this Thursday here in the Philippines and Wednesday in the US. Will the Fed surprise us with a rate cut? Very, very unlikely, but jobs data this week, JOLTS, non-farm payrolls, and the unemployment rate could confirm and solidify a September rate cut if labor data continues to come in weaker. This week, we also continue on to earnings. This is going to be the busiest earnings week, as the market has started to become bearish on the AI story. A slew of semiconductor earnings this week may turn things around, most especially on their forward guidance. Remember, Alphabet had great earnings, but a slight miss on their YouTube revenues set the stock down. So implied volatility this week, big names like AMD, Starbucks, Meta, and Qualcomm with possible plus or 9% moves. Apple and Microsoft with an implied volatility of around 5%. This could be a choppy week for the US markets, but we'll see, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.